Capital markets in the US is kind of an interesting element. It's mostly retail driven. And that means that the domestic activity is funds related, mutual funds for retirement plan. In addition to Mana, there's allied investors, Azad funds. Now there's a new robo-advisor, Wahid, etc. So it's a very active market.
If I could just clarify that. So if we look at the green line, that's Amana. So they started really early in the market, but only after 95 onwards, the other players came into the funds market, Islamic funds market.
The issuance of Sukuk is not subject to any new rules that are required in the United States. In fact, if you want to securitize assets, the securities law is completely compliant with, or let me rephrase that, not compliant with, but compatible with Islamic requirements.
It's interesting. So if we recall, in the banking market, there were interpretation by OCCs before we could, you could actually do Islamic finance activities. But what you're saying is, in the capital market, that's not the case. That's not required.
The equivalent of sale leaseback securities have existed for a very long time in the United States, so that would just not be a problem at all.
Ah, okay.
So now you look at the first two transactions involving the US, and these are very much absolutely securitization transactions.
So the securitization framework is already there. Even if you added the Islamic layer, you can still fit into the existing framework.
So asset-backed, I own an asset, it's on my balance sheet. When we're done, you own the asset, and it's off my balance sheet. Asset-based, I own an asset, it's on my balance sheet. You own some connection to that asset. And the reason I'm using the term connection is that it's very wide. You could own a great deal of connection or a very limited connection. But your problem is that if you and I both show up in a court of law, the judge may say that you don't own anything that is collateral.
So why has there not been that much debt capital market activity in the US?
There are tax and legal reasons why securitization is treated like debt.
Let me ask you differently. Why does it matter if it's a debt instrument or not? So in this case, the private ruling will be from the IRS.
Correct.
Okay. So that's why you always see the disclaimer in 144A Sukuk.
As of the law today and the regulation today, you will never see a commodity murabaha leg on a domestic US Sukuk. And the reason for that is,
with the exception of maybe number 2, entity doing business, I would say issue number 1, debt instrument, and the ownership is a general Sukuk issue anyway. It's not particular to the US. Whereas being taxed as an entity doing business is quite maybe particular to the US.
Exactly.
What would be your takeaway observation on the capital markets in the US for Islamic activities? So if the market currently is focused on home finance and that's already met by Freddie, do you think there's a need to explore other avenues, or is that going to be futile?